Hey everyone, we've just seen one of the biggest crashes in crypto history, wiping out billions of dollars in liquidations. But hold on, XRP is back up 37%, Cardano up 41%, SUI up 34%, ICP 25%, Casper 32%. So, are we about to witness a massive altcoin recovery? Or is this just the calm before another storm? In this video, I'm going to break it all down for you. We're going to look at historical charts to see how the market reacted after the last 5 major crashes. I'll also show you the Ethereum Volatility Index, something no one is talking about but is critical right now. And most importantly, I'll reveal exactly what the big investors, the smart money, are doing at this moment. So if you're feeling anxious and unsure about what's next, don't worry. You're in the right place. Smash that like button, let's get into it. First off, I want to say, I get it. This crash caught a lot of us off guard. Personally, I've lost hundreds of thousands in just the past 24 hours. But here's the thing. I've been through this before, and I know one thing for sure. Panic never pays. Crypto is a high-risk, high-reward game. If you're in this market, you're here for the upside, but the price we pay is volatility. Huge swings, up and down. And right now, if you've held through the last 24 hours and avoided emotional decisions, then congratulations. You've likely weathered the worst of it. So what actually happened? The catalyst for this crash was a surprising news event. Donald Trump announced new tariffs, sending shockwaves through global markets. Stocks dropped, crypto dumped even harder. And as always, when these unexpected events hit, exchanges take advantage. Exchanges use fear to flush over-leveraged traders out. When markets are pumped with volatility, liquidation cascades follow, dragging prices lower. Why? Because exchanges don't want traders making money off excessive leverage. They want to shake you out, take your money, and then ride the wave back up. Now, let's talk about something crucial. The Ethereum Volatility Index. This indicator shows us just how wild the swings are in the crypto market. Looking at past data, whenever we see massive spikes in volatility, a recovery usually follows. Think of it like throwing a rock into a pond. The biggest waves happen immediately, then things start to calm down. Right now, Ethereum's volatility just saw a huge spike, signaling that we might be nearing the end of this chaos. Now, here's where it gets really interesting. I want you to take a look at this chart. This shows retail versus smart money holdings. See the pattern? Every time retail investors are panic selling, big money is buying. Back in May and June last year, smart money was dumping while retail was buying. What happened next? A brutal correction. Now, we're seeing the opposite. Retail is dumping in fear, but big investors are accumulating. That's a major signal that a recovery is on the horizon. Now, I know some of you are getting frustrated hearing buy the dip when the dips just keep coming. But let me show you why it still works. Let's use ICP as an example. If you bought at $14 and then again at $9, you've lowered your average buy price significantly. And if you kept buying on the way down, you've positioned yourself for huge upside when the market recovers. Most people enter crypto when the market is already hot, chasing green candles. The real money is made buying when everyone else is fearful. Just look at what happened after past crashes. SUI, for example, dropped 78% in a shakeout, only to surge 11 times in the months after. Let's talk short term. After major crashes, Bitcoin's 10-day return is often mixed, sometimes negative, sometimes positive. But the real magic happens in the 60-day window. Looking at past major events, US-Iran conflict, plus 20% COVID crash, minus 25%, but massive rally after, US election uncertainty, plus 19% Russia-Ukraine invasion, minus 6% US banking crisis, plus 25%. Even after the yen carry trade shakeout last August, Bitcoin rebounded 44% over the next 2 months. So, while short-term uncertainty is high, history tells us that if you zoom out, things recover, especially in a bull market. So, what's next? Well, all eyes are on the US stock market opening. If we see further downside, there might be one more shakeout. But based on historical patterns, we're likely closer to a recovery than another major crash. The key here is understanding what the Fed and Donald Trump are doing. Trump's aggressive stance could force the Fed to cut interest rates sooner, triggering a rapid economic expansion, and with it, a massive crypto rally. Look, if you're still here, still holding, and still thinking long-term, you're already ahead of the majority. The biggest mistake people make in crypto is panicking at the bottom and missing the ride back up. Big money is accumulating. Volatility is peaking. And historically, these moments have always been the best buying opportunities. So, take a deep breath, stay rational, and if you found this video helpful, make sure to like, subscribe, and hit the bell icon so you don't miss any updates. Let's ride this wave together. See you in the next one. Blast off.